performance by the team. So it's very good. So that's really the summary of our financial numbers. From a business point of view, if I start again from Australia, Australia did very well, significantly better than the previous year. Southeast Asia was kind of muted, had some COVID challenges both in Indonesia and Thailand, but they have done well. But compared to the other regions, it's a little muted. India had a first quarter April was a washout, May was partial washout, and we started seeing a recovery. But it is a surprisingly good quarter for us in India, across all sectors, across all product verticals. So this has been a bit of a surprise for us. Economic activity in India is happening. Maybe not the large projects, but the compressors that we sell, a bulk of it goes towards. They're not big capital equipment. They are balancing capital equipment. So from that point of view, we have been seeing a very solid recovery in India, and we expect that to continue. But it's very difficult for us to say with clarity whether there will be continued growth in the trajectory that we have created. Primarily because, the Diwali season is coming, people are out there. We don't know what will be the infection rates, whether there will be a second wave like it is happening in Europe, and whether the government will resort to certain strong measures. So we have to wait and see. But as of now, the business outlook in India is good. Gulf has been a bit of it's not delivered to what it promised. It's better, slightly better than previous year, but nowhere near what we're supposed to be doing. Europe, like I said, the initiatives are beginning to pay off. All the businesses are growing there, so which is a positive thing. US also, all the businesses have grown. They've done better than the previous year. So we expect that Europe and US, if external factors are not disruptive, we will continue to see some positive continuation of this positive outcome. Now, the subsidy that we received from Australia and the US was significantly high in the first quarter, substantially lower in the second quarter. We won't see any of this subsidy in the third and fourth quarter unless the US government brings in another set of initiatives, interventions in the economy. We don't know. There's nothing clear about that. There is a lot of conversation about significant intervention, but we'll have to wait and see with a change in the presidency and all that, how that works out. We'll have to wait and see. So this is really the business side. As far as the outlook is concerned, like I said, on sales, we see some marginal growth in the third quarter and the fourth quarter compared to the second quarter. Material cost, very surprisingly, has started becoming a challenge. I don't know whether it is avaricious pricing. Steel prices, for instance, have gone up by 10 to 15%. And I think the automotive demand is probably causing it, and a lot of the steel companies' factories were shut down in the early part of the year. Hopefully, they will open up when supply situation will improve and prices will stabilize. Almost all of our vendors are asking for price increases. So there is going to be a pricing pressure. We are working towards ensuring that we maintain our contribution over material cost, but it's going to be a challenge. As far as people costs are concerned, we expect it to be at the same levels for the balance of the year. We don't see any need for increase. In fact, there could be some reduction, but we don't want to put anything there yet. Other fixed costs, As it really depends on the business. If business starts climbing up, we expect some of these costs to come back up, for instance, travel. But there are some fundamental changes that we have made. Like, for instance, we have decided to shut down all our branch offices and bring working from home as the new normal. So there will be savings in terms of our rental. So those kinds of permanent changes that we have made, irrespective of the growth in the business, we will continue to have the benefit of that. Other fixed costs will go up. If you look at the levels in Q2, it has been pretty much at the same level as Q1, which has been a very good achievement by the team in spite of growth in revenue. But there could be some creeping increases in Q3, Q4, but that will be more than compensated by the additional growth in revenue. So this is really the summary of our business and the outlook that we have. So I will stop here and then I will wait for your questions. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Mr. Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Good afternoon, sir.
Good afternoon, Ravi.
Sir, my first question is with respect to the compressor segment. It has seen a healthy 12% growth. How much do you think this magnitude of growth can be sustained going forward also, and from which sectors have you seen growth in the compressor segment?
Mm-hmm. Well, like I said, Ravi, I'm not able to say for sure whether the growth trajectory can be maintained because there are still so many uncertainties that are there. If those uncertainties are not there, we can expect the trajectory to be maintained. But please understand that 12% growth you're talking about from previous year, so that's possible to do. But you can't expect the growth trajectory from quarter to quarter because that we started from a very low Q1. Yeah.
Yeah, correct.
As far as sectors are concerned, like I said, we have been quite surprised that the growth has been across all sectors. There's nothing. Sure, certain sectors like pharma, certain sectors like food have contributed disproportionately higher, but it doesn't mean the rest of the sectors have not done well. They've all done well. They've all contributed to our revenue.
Got it. And automotive equipment?
I wouldn't say it's anything. Sorry?
Oh. Hello? Yeah. And automotive segment, automotive equipments have seen a decline, 24-25% decline still year on year. So can we see a recovery in that in the second half?
We're already seeing some recovery because, this is linked to that is automotive equipment business grows with a lag in the growth in the automotive segment, right? Now, the automotive segment had a very bad first quarter. They started picking up in the second quarter. We are beginning to see some results of that coming into our business. So we expect it to grow in the third and fourth quarter. If the automotive, both two-wheeler and four-wheeler sustain themselves. Yeah.
Got it, sir. And final question is with respect to the other costs. You had mentioned that some of them are structural, the cost savings. As a percentage of revenue, as number of bips wise, can you quantify as to what can be retained by LG because of the cost saving initiatives that we have?
I don't have the numbers in front of me, Ravi. I can't really give you a specific number.
Okay, but roughly 50 bips saving can be there, sir? 50 bips saving or something of the 50 bips saving can be there, sir? 50 bips.
No, the biggest cost in other fixed costs is travel, right? Travel and communication are our biggest cost, and those are tied to our business, right?
Okay, got it.
If business grows, those numbers have to grow, because if you don't, you're going to throttle that and you're going to compromise on business. You know? But we're very careful and judicious in terms of permitting. Like, for instance, we don't allow for any travel to head office. So we are saying there is no need for people to come to head office, right? So earlier those meetings are taking place. Those are all things fundamentally we have changed. Yeah. So it's very difficult to quantify each element by virtue of our new policies and practice. Yeah.
Got it, sir. Got it. Okay, sir. I will come back in the queue if I have more questions.
Yeah.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. Congratulations, Jay and team, for a good performance despite challenging environment.
Thank you.
I have a few questions. First is, we have seen improvement in the gross margins, and in your opening remarks, you did caution about increasing steel prices. So would you believe that the increase in the margins you have seen on the gross margin side is where we would have consumed lower cost inventory, we would have got acquired during the COVID period, and hence a normalized level is what we would have seen maybe last year, it comes back to that level?
I don't think it is entirely because of low cost inventory. There was no reduction in cost during the COVID period. So it was continuation of the cost. The contribution margins went up at a gross margin level because of better price realization. There's a geography mix. There is a product mix within the geographies. So it is really not, and certain strategic pricing decisions. Now, this is nothing to do with a lower material cost during the first quarter. So now that we have realized the better margins, now the material cost is going up. Now we need to adjust to the extent that it's possible. We can't allow the top line to get compromised by virtue of significant cost recovery. So we have to be a little judicious, which is what we are working on. So whether we'll be able to sustain, so if you look at it today, we are close to about 1.4%. At material cost level, we are higher compared to Q2 of last year. Now, our goal is to sustain this. Now, will we be able to sustain it? That's what we're working on. So it's not because of lower cost, it is because of better realization that we have gained this. But costs are going up. We need to see, is it possible for us to bump up our pricing or shift in mix to be able to recover?
Sure. Second question is what you had highlighted during a call when COVID lockdown has just hit, that we're looking for better sweating of the assets, where you were also open to using our foundry for third-party projects. Any progress on that front, and how would we see any benefit coming on that side?
We haven't. We've started the progress. We've started engaging with customers. We've got 2-3 customers with whom we have started pricing dialogues. But have we got orders into our thing? Not yet. So we don't expect any contribution from the foundry this financial year, but we expect that to happen next financial year.
Okay. My last question is, if you could give us some highlight in terms of the newer product that we had highlighted about, the oil-free compressors. How are we progressing on that? And if you could break the answer between domestic and international.
Well, I don't want to give specific numbers because it's very competitive sensitive. I can only say our overall oil-free portfolio has done exceedingly well across the world, both in India as well as in international markets. In international markets, the starting base was very, very low, almost zero. So from that point of view, it looks phenomenal. But numbers are still, when you look at it in absolute numbers, it's not significant yet. Whereas in India, we have really pushed ourselves into the market. Our starting numbers are not as low as international. In spite of that, our growth has been very good, very positive. And within that oil-free segment, our new AB series has done exceedingly well. So it's a very positive move for us. And part of, when I said product mix, part of it is also because of this.
I understand. So there's one more question, if I may. So on a macro basis, we are seeing a lot of the companies in the electronics and the semiconductor industries looking to set shop in India, given the PLI scheme of the government. So as LG, what kind of benefit that we would see as some of these companies come and set shop in India?
Well, our oil-free compressors would be a critical requirement for the semiconductor. We're already supplying to companies outside the country who are involved in semiconductor business. So definitely that will be an area, but we'll have to wait and see. You know, there was a lot of talk about building semiconductor business in India many years ago. Nothing came out of it. So we'll have to wait and see whether this is something that will be sustained.
Sure. Yeah. Thank you so much for taking my questions.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, sir. Thank you very much for the opportunity.
Hi.
Sir, could you give us a sense on share of aftermarket revenues for the second quarter as well as the first half of FY21 versus what it was last year?
Sorry to interrupt, sir. So your voice is echoing a bit.
Hello?
Yeah.
Sir,
yeah, I'm not able to hear you very well.
If you can come closer to the instrument.
Hello, is this more audible?
Yes, very clear.
Thank you.
Yeah.
Sir, my question was on the aftermarket, sir. Could you give us a sense on share of aftermarket revenues in the second quarter as well as for the first half of FY21 and how it would have improved versus last year?
I don't have the numbers in front of me, but I can give you some anecdotal directional answers. When I said the reason why we have improved our gross margin, I said there is a product mix shift. One of the product mix shift is the aftermarket shift. We have done better in aftermarket compared to the previous year. In addition, we got better pricing in our aftermarket this year compared to the previous year. So both of these are very positive, and we continue to see that very strong traction, not only in India, but in the rest of the world.
Sure, sir. Sir, secondly, sir, going by the press releases that you have made recently, I think we have started expanding our distribution network at a rapid pace in USA. So, sir, could you give us some more flavor on the same as to what kind of distribution model we are building there? I reckon most of them are joint ventures.
No. They're not joint ventures at all. We have today 4 joint ventures, and these are areas that we strategically pick. Our first preference is to bring on board independent distributors. And if we are unable, and that too in strategic geographies of a given country. So if you look at the US, we have identified the top 20 geographical areas of the US which contribute close to 60-70% of the revenue. And in these geographies, we have to have distribution, and wherever we are unable to get independent distributors, for us, one of the options is to create a joint venture, which we have done in 4 locations. So the growth in distribution has been positive. In the U.S., in terms of increase, is not as high because we have been in the U.S. for the last 5-6 years. There is a certain maturity in the distribution model network, and incremental small increases are there. Whereas in Europe, which is we incubated Europe 1.5 years ago, and we are beginning to see very high traction in terms of number of distributors that have come on.
Right. Understood, sir. So, sir, if I can squeeze in one more question. You had earlier indicated that you would start production of motors for both USA and Europe markets as well. So the validation trials were going on when we had interacted last time. So, sir, have we made any progress on that front?
The last time we spoke, we said validation was going on in India, and that has been completed. We have started supplying motors to the Indian market on a regular basis. We are unable to increase the volume primarily because one critical machine that we had ordered is stuck in Germany because of this COVID condition. Once that machine comes in, and we don't know when it is going to come and get installed because of all the uncertainties in inspection and transport, there will be a significant increase of supplies from that plant for our Indian requirements. The motors have been made for U.S. validation, and they are will be going out to the U.S. market this month. And in the next financial year, we'll pretty much cover all the major geographies as far as the motors are concerned.
Sure, sir. That was very helpful. That would be all from my side.
Thank you. The next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Yeah, hi, Jay. Jay, I wanted to ask you a high level. Yeah, I trust everything's okay. I wanted to ask a high level question. As you see, I heard you say a lot of permanent changes where you said the branch guys are no longer having to come to headquarters and a few other things that you talked about. What are the opportunities that you kind of see coming out of the COVID, and is there anything disruptive that could change the trajectory of the business over the next year or two?
There is nothing disruptive in terms of the application of compressed air. I don't see that any change happening there. It is just a matter of how you conduct your business. And for us, what we are seeing as a result is what we have been doing, the work that we have done over the last maybe 3-4 years, which had a significant cost impact during that period, is now beginning to deliver both top line and bottom line, right?
Fair point.
The cost that we incurred in America 2-3 years ago is now beginning to show results. The cost that we incurred in Europe last year is beginning to show results. The cost that we incurred, investment that we made in Australia is beginning to show results. So it just so happens during the COVID time. Now, if the COVID had not happened, maybe the growth would have been even more for us, right?
Right.
So the fact that we had created an international profile, geographically diversified profile of the business is what has really helped us in the last couple of quarters.
Fair point. And my second, Go ahead. Sorry.
Fundamental, deliberate decision of the company, and it has been systematically executing on it. I know that in the process there were delays in getting the results, there was some angst in the investment community whether we were going in the right direction. But this is the last 2 quarters are a redemption of that of the direction that we have taken.
No, fair point. Fair point. A second question is, I'm kind of saying if I were to take a base case that you have a huge U.S. and European industrial boom, right? And actually, that's my base case. But so I'm saying if I'm assuming that plays out, and it's more visible in the from March or June onwards, March or June 21 onwards for the next year or two, it's kind of super cycle feel that you kind of see what's happening in the developed world, and that transmits to Asia and India especially. As you see, if you see that story play out, you would, in my view, would you obviously participate in it and see excellent numbers and excellent growth rates play out? Would that be a fair way to think about it?
Well, we are now present in a I wouldn't say significant, in a substantial manner. Our presence in these critical geographies is strong. Now, if the economic conditions of these geographies improve, definitely there will be a gain for us. But we've got to understand we are at the bottom of the ocean, right? Our market share in most of these countries is very small. So it really doesn't matter whether there's economic growth. It's like a fish at the bottom of the sea. It doesn't worry about the storm at the surface, right? It will continue to remain and grow. And that's really where our growth is coming from.
Yeah. Okay.
Gaining
Got it.
share in the market.
Yeah. Super. Thank you. Good wishes, Jay. Thank you.
Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Yeah. Thank you so much, and very hearty congratulations, sir, on our excellent numbers, sir. Would it be possible to share? You did mention that Q2 had 57% revenue from international. How would that been looked at if you look at half-yearly basis? How the numbers would be looking, sir?
In half year, our growth has been international has gone from 46 to 57, so almost the same.
Okay. So just if I probably dissect the numbers a bit, still if I look at India per se, the YOY revenue decline looks to be in Q2 looks to be just 15-16%, which still is quite decent. So if you can give us a perspective as to within India, like how is industry segment or infra related demand, railways, water well, how is it looking now? How has it been, and how do you see it going forward? A bit flavor on this, sir.
Well, like I said, Manish, industrial across sectors on industrial we have grown. Yeah, all of them have contributed. We expected many of these segments to be absolutely zero contribution to our revenue. To our surprise, even sectors like foundry or which we thought textiles, which we thought that we would not see any action or any activity, we are beginning to see activity. Of course, like I said, food and pharma have been much more active than the other verticals, but cement has grown, textiles have grown, so there's been activity across the sector.
Sure.
On the infrastructure side, the large projects are continuing to be still very, there's no activity, large power plants or steel, there's nothing there. But in the construction side, primarily on roads and infrastructural construction, we see a lot of growth in equipment requirements for that sector, right? So basically road construction, building construction, that kind of stuff.
Right.
Railways is a function of the budgetary allocation. It continues to remain at the same level. There is no significant growth there. Water well is muted, but we have got some significant gains in that segment, primarily on some of our OE customers who are exporting their machines to various parts of the world. So there we have got some significant gains. So this is pretty much the thing. And aftermarket, like I said, is continuing to grow.
Sure. Okay. Wonderful, sir. And on the exports from the India concern, that we are definitely seeing very good uptick from our subsidiaries overseas. But how is like our direct exports doing, sir? Or is it that henceforth our subsidiaries will be responsible for the international market, and direct exports from India may continue to see a decline?
I don't see that at all. I mean, our direct exports from India are to different, like Southeast Asia, it's primarily direct export. To Africa is direct export. So I don't see, these are markets that will continue to be there. I don't think that will change. So I don't see a big shift from direct export to sales through subsidiaries.
Okay. So when we refer to our international sales, it includes the direct exports from India as well.
Yes.
Okay. And sir, how is the recovery on the patents subsidiary, sir? Last year we did had certain more challenges, and we had certain one-time in terms of property. So how has it been performing in the current year, and are we probably looking to a break-even or a profitable growth, sir?
Yeah, patents profitability has significantly improved. Growth in revenue has been kind of muted, but it's in the right direction. We are in the middle of making some changes organizationally there, which we think is going to further contribute to an improvement. Patents medical has grown both the top line and bottom line so very significantly. Our portable business, which we took over from a distributor, has also grown. So all the businesses there have grown.
Okay. Very encouraging, sir. And on the Europe front, sir, are we looking like, as you mentioned in your initial remarks, that large part or a major growth has come from Europe. So are we then kind of looking to further invest in terms of deploying more people on the front end? What are we looking going forward, sir?
So we had made a plan of investing a certain amount of money over a period of 3-4 years.
Yeah.
By which time, on the third year, we said we will break even, and then we will recover our money between the fifth and sixth year. That plan has actually continuing, but in a more favorable manner, because many of the investments in people we have deferred. We have not canceled, we have deferred, right? So as things pick up, we will judiciously keep investing in the people that is required to get the business that we have got, grow the business that we have got.
Sure, sir. Sure. And are we, like, with the second wave creeping in the European market, so of late, are you seeing some restraint on the sales, or still there is no challenges?
So far we are not seeing anything. I think a lot of countries have learned the lessons about the complete lockdown and the impact that it has on the economy. So when Spain went through, certain parts of Spain went through, they did, very localized shutting down rather than shutting down the whole country, right? So we'll have to wait and see, because this is also an impact that comes from, the people taking holidays. I mean, August was a big holiday month in Europe. Everyone went on holiday. Now, is this the result of that, and because of that, and whether it will get back to normal, these are all things that are open. So governments are not taking extreme steps. They can't afford to take extreme steps like they did in March, April. So they're being very selective about it.
Sure, sir. And sir, last question on the working capital fund. It has been quite encouraging to see very good improvement on reduction in inventory and receivables. So, do we expect further decline, absolute decline, or like the current levels in terms of working capital days would be new normal for us in terms of betterment? Please go ahead. No, so basically I was also coming to a point in terms of with further cash flows improvement, can we expect further decline in the debt by year end?
Yeah. So in terms of working capital, there is always room for improvement, but I think we have, in the last 6 months, 7 months, we have extracted quite a bit of the low-hanging fruit. But we expect some marginal improvement in aged receivables, aged inventory, but it's not going to be as dramatic as we have seen in the first 6-7 months. But in terms of our debt level, considering the current trajectory of our revenue and profitability, we are very conservatively, we believe we can reduce debt at the rate of about 5 crores a month in the second half of the year. So that we are reasonably confident. We also expect that, like I told you about the motor plant, there is a machine that was ordered that got delayed.
Right.
There is another machine that we bought for our rotor production that was partly paid, and it is sitting in Italy. So these are machines that have to be brought in. When things improve and transportation, inspection, all that happens. If it does happen in the year, our investment in CapEx, we're also investing in CapEx for facilitating virtual inspections, so customers don't have to come to our facility. They can see the machine being run and they can see the machine being tested. We're using pretty sophisticated technology to make that happen. All that will probably, at the max, we will spend about 15 to 20 crores, if at all, if these machines are ready to be shipped. So net, I think our debt levels will go down more in the balance 6 months.
Wow. Great, sir. Thank you so much. I'll come back in the queue, sir.
Thank you. The next question is from the line of Bhavin Vatlani from SBI Mutual Fund. Please go ahead.
Yeah, thanks for the opportunity, again. So pardon my ignorance for that. So Atlas Copco in the recent call was talking about a massive change in the customer behavior towards adopting more Industry 4.0, a lot of sensors in that and interconnecting with the entire ecosystem of the facility. In lieu of that, how would be LG placed in that? That's my first question.
Well, we have our own IoT device which has been tested in India over the last 2 years. We have built a platform which is a global platform. We have also developed a partnership with a global company to be able to provide a global SIM card. All this is going to be launched into the market in the month of March. Now, unlike other competitors who sell the IoT device as an added thing with a service contract, we have designed our machine, our device in such a way that we will be making it as a standard fitment into our product. Now, so any customer, it doesn't matter what the size of the customer, we will be able to read the customer's machine on a continuous basis and provide opportunities for the customer to reduce cost, to reduce downtime, and a whole host of other services, including quite a bit of predictive algorithms that we have built for preventing failures. So we are well on top of it. We expect to see that as a positive initiative for the next financial year.
Sure, that's helpful. Second question is continuing on the same lines. Would it be possible to outline the areas of R&D and innovations which we would be focusing on? So one we did mention on the IoT side, but and we saw a good product coming out of oil-free screw compressor. If you could outline without impacting your competitive advantage, that will be useful.
So, like I've always maintained, our innovation and technology product development is all focused from a customer's point of view. A customer's point of view is energy. 70 to 80%, depending on the type of product, 70 to 80% of the life cycle cost is energy cost. So our singular focus in all our technology and product development initiatives is to keep bringing down the energy consumption of the compressor, which means making it more and more efficient. And we are even as we speak, we are upgrading our frames and are introducing new machines that are just pushing the bar on efficiency. And we are moving up. We are now top 3 in most of the models in efficiency in the world. And our goal is to be the number 1, and we will get there. And we have already launched models which are where we are number 1. So this is a journey that we are going to be involved in. The other one is how to make more and more efficient oil-free machines, which is an ongoing process.
Sure. Yeah. Thank you so much for taking my questions.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Ritvik Sheth, One Up Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have a couple of questions. Firstly, on the European investment, from your previous response, it looks like that, if we see growth, then we will go forward and invest, which we had planned at the time of, FY20 budget of about 25 to 30 million over 3 years. So is this a shift from previous strategy, where we are going to invest irrespective of the revenue, and now the new strategy is that if we see revenue growth and then if we see opportunity, then we will go forward and invest?
Well, if COVID had not happened, we would have continued down the trajectory of our earlier strategy. Now that COVID has happened, there is a certain tentativeness, and the team rightfully is taking a step back, reviewing what the consequences are, because they are, after all, responsible for the top line and bottom line. I mean, the bottom line is deliberately planned to be negative, but it can't get more negative than what was the plan. So today we are less negative than what we had planned. And so the team is ensuring that we stay at that level. So they have to be a little bit more deliberate, right?
Okay. So we will wait for the revenue to kick in or the opportunity we see before committing more capital.
Yeah.
Right. Sure.
Yeah.
Okay. And so second question is on the tax rate. What is the tax rate we should assume on a consolidated entity level?
Well, if you see the tax rate, it's gone up to about 40-odd%, 45, I think. And that is primarily because, Europe is a loss because of, it's a deliberate loss. So
right.
The effective tax rate gone up, but where we are paying taxes, the rates have been quite normal. Right? It's only at a consolidation level you have this anomaly. Yeah.
Okay, sure. Thank you, and wishing the entire team a happy Diwali. Thank you.
Thank you.
Thank you so much. Thank you.
Participants, if you have any questions, please enter star and 1. We have a question from the line of Deepan Shah from One Up Finance. Please go ahead.
Yeah, hi, sir. Just two quick questions. There is a stated journey that you had charted out, and in the medium term, to be amongst the already we are amongst the top 3. Would you say there are any adjoining pieces that need to be corrected, or we are lagging behind? That's question number 1. Question number 2, just to fill up the entire product offering, how would you say how we are placed in terms of offering spares and so on and so forth in a very efficient manner, irrespective of the geography that we service? And 2, at a later date, are we possibly planning to enter the larger machines, which is the centrifugal, by any chance?
So I don't know what you mean by adjacencies. Can you help me understand that?
Sorry, sir? The spares and so on and so forth. So, we are doing only the recip and the... so are we, to kind of completely have all the offerings within the compressor family? Do we want to get into, at a later date, even the centrifugal?
Absolutely. I mean, we have developed our own centrifugal compressor. We have sold it in India. We will have to go through the process of validation and learning, which we will do. Today, if you look at our range of compressors that we have, from a product opportunity point of view, we are close to at around 80-85% of what the product opportunities are. So we are well placed from a product platform. Geographically, we are well placed in close to 60-65% of the opportunity. So if you take out China from the denominator, we are close to at 90% of the opportunity we are playing. So 85% of the product and 90% of the geography, then we are a significant presence both on product and geography. Yeah.
Perfect. So that's very helpful, sir.
Thank you. The next question is from the line of Pratik Sheth from Annual Wealth Management. Please go ahead.
Good evening, sir. Thanks for taking my question. Sir, a couple of questions on how do you see growth panning out over the medium term for us. 2 questions. One is that if, as you highlighted earlier in the calls and analyst made, the global market share for compressor, the global market size for compressor is $15 billion. How do you expect that to move over the next, say, 5 years? Like, what is the growth rate that we should be assuming? And secondly, in a market like India, where we've seen that the market has been cyclical in nature, and whenever we see from a bottom to from a trough to like the peak, we've seen turnover double in 3 years historically for us. So do you see some evidence that something of this can happen in India? Because in terms of market share, whatever we'd lost, we have gained back, is what I assume, over the last couple of years. So do you see something of this sort happening for the industry in India, and your thoughts on global compressor market?
Yeah, the global compressor market, if I look at historically, it has grown anywhere between 1.5 but that is basically what we have to expect into the future. Right? As far as India is concerned, yes, we have gained share in almost all verticals that we are operating in, but there is still room for us to improve. So the India play is to not worry about the growth of the economy because we don't control it, but to focus on growing our share of whatever the size of the market is, and that's our strategy for India. And we've been executing it systematically, and we're beginning to see results. As far as the international is all about, like I said, we are a fish at the bottom of the ocean. I mean, it doesn't matter what is happening to the economy at the top of the surface of the ocean. We have a lot of headroom to grow, and that's what we are doing. And in spite of markets, shrinking, we are growing our revenue, which means we are growing our share of the market.
Sure. So, one question I might have missed the call a little late. Have you given the growth rates for this quarter for Europe, USA, and Australia for us?
I'm sorry, I can't hear you very well.
Yes, sorry. Is it that your voice is breaking up in between?
Okay. Can you hear me now?
Yes, better.
Yeah, a little better.
So, I joined the call a little late. Have you given the growth rate for US, Europe, and Australia for us in absolute percentage?
Sorry, but I'm not able to hear you at all. I mean, there is some distortion.
Okay, I'll come back later.
Thank you. The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Sir, just wanted to clarify, when you said 57% of revenue from international market, is it of the total sales or is it only for the compressors business?
It's a compressor business.
Okay. Fine, that clarifies. Thank you so much.
Thank you. Participants, if you have any questions, please enter star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Kamlesh Kota for closing comments.
Jay, just a couple of points I wanted to understand. This 10-12% growth that we have seen in compressor business, would it be possible for you to get some sense as to whether which one has grown faster than the average in terms of US, Europe, and India in particular?
Well, if you look at regionally, Kamlesh, India has not grown, right? Because our first quarter, there's been, if you look at India, which includes standalone India, it's about -2%.
That's true.
Right?
Yeah.
So, but if you look at the US, it has grown pretty significantly, right? I don't want to give the specific numbers, but it has been a significant growth,
But between the two, US and Europe?
I would say US is higher.
Okay.
Europe is 0. The previous year was 0, right? So in terms of, I'm talking now about the areas where we have created the initiative. Rotair, of course, was there last year, but Rotair was, Italy was the worst hit in the COVID time. So previous year was very solid for Rotair. So current year there's been a degrowth. But the initiative we started in Europe has grown phenomenally because the last year was 0.
Right. And so as we speak, Jay, with this kind of initiatives that we have put in and the kind of numbers we see, is it fair to assume that we are on track now to grow 15% CAGR over next 3 to 5 years with more or less this margin band?
Kamlesh, if you look at the MD&A in the annual report, we had made a commitment that we will come back with a more realistic midterm plan. Rather than keep talking about CK2, we said we will break it up. We said that we will try and complete that by the end of the first quarter. Now, unfortunately, we have not been able to, but we have done significant amount of work in terms of calibrating. So if you can bear with me till the end of this quarter, that is the third quarter, we will have a very clear roadmap defined in terms of where we want to go and how much we want to do year on year. Yeah? Great. Not just on sales, but also on profitability and on capital and all of that.
Great. Wonderful. Good. So we don't have any further questions. Jay, any closing remarks you would like to make, sir?
Yes. I just want to, one of the key things that we have seen in our company in the first 6 months of this crisis is the phenomenal participation of our employees. I mean, it's very difficult for an outsider to understand this, but I've been there and watching it under the toughest conditions of supplies not being there, the threat of infection constantly being there, with the demand going up. Our operations team has just done a phenomenal job. And I think I would be not doing my job if I don't acknowledge that in a forum like this. I mean, so please understand, you must have seen the cases of COVID in many factories of a similar size, and I will challenge you that our people have been so careful, so committed to ensuring that they remain safe, and therefore the company continues to. We have less than 20 people who have had an infection, and that too very young people, and they've all recovered. And the team has just done, and people have said, you tell us when we want us to come. Saturday, Sunday, it didn't matter. And I think I want to just acknowledge the performance of the operations team. And on the front end, with all the challenges of unable to travel, difficulty and not advisable to travel, both the sales and service team, not only our team, but also the distributors team all over the world, have just done an outstanding job of and taking our company to our customers. They've just done a phenomenal job. So this has just been great to have built a team like this.
Great. That's commendable. Yeah.
Thank you very much. On behalf